Hi, this is Mary Kay Wright with Properties, the Messino team in St. Charles. Today I'm here with Chris Bolek with Caliber Mortgage, and we're going to be discussing some pertinent information regarding loans, pre-approval, qualifying, mortgages, everything you want to know. Chris, why is obtaining a pre-approval so important and should be the first step for any buyer looking to purchase a home?
Well, you want to make sure that you're staying within your budget, first of all. So if there is a payment that you want to adhere to, your lender can give you a price point where you need to be to stay at that payment.
Right.
Also, you want to make sure that you qualify. You want to make sure that you're looking at your credit report, and if there are any blemishes out there, your lender can potentially coach you to get that cleaned up. At Caliber, we have the ability to rescore a credit report after there's been a correction to it.
Okay.
And that'll affect your interest rate and really what you can qualify for. Yeah.
And as a realtor, I'll tell you, there's nothing sadder than taking somebody out and they fall in love with the house and then they find out they don't qualify for it.
Right.
So pre-approval is a way to go.
And you're wasting your time and everybody's time in the process if you're not qualified and you don't know what you can purchase.
Right. Right. Chris, can you explain the difference between a pre-qualification and a pre-approval? What's stronger and why one's better than the other?
Sure. So pre-approval is when we've actually collected income and asset documentation, we've pulled credit, we've run the borrower through the automated underwriting engine, and then we've actually had an underwriter take a look at the income and asset docs. So the file's already gone to underwriting with a addresses to be determined, and then we get a pre-approval from it. So it makes it it's a much stronger approval because the borrower is vetted much more.
Right.
A pre-qual, we're pulling credit. A lot of times I will still get the income and asset documentation because I'll do that digitally.
Right.
And then we'll run it through the automated underwriting engine, but not necessarily been reviewed by an actual underwriter.
So a pre-approval is much stronger
Pre-approval is much stronger
than a pre-qual.
Sure. And we have the ability to do pre-quals.
Okay. And paperwork for your loan officer. What sort of paperwork will a loan officer need initially to get the pre-approval? And then we'll get into why it's so important for the rest of the paperwork to be submitted on time.
Sure. So at Caliber, we have the ability to digitally verify income assets a lot of times.
Okay.
So that will eliminate the need for paperwork altogether. But typically, a rule of thumb for the industry, we're going to look at 2 years tax returns, 2 years W-2s, most recent.
Okay.
30-day pay history. So if you're paid weekly, your last 4 paycheck stubs. If you're paid bi-weekly, the last 2.
Okay.
We're going to look at 2 months assets. Sometimes we can get away with 1 month of asset statements.
Okay.
Excuse me. But we're going to need all pages of those documentation. So if the assets, they have blank pages, but they're numbered.
Right.
Underwriting's going to need to see that.
Okay.
And it's just important to get that paperwork on time into us in a timely manner because there are specific dates in the contract that we have to meet. You have a commitment date that's within the contract, so
right.
It needs to be done as quickly as possible. A lot of times we can do that up front. We can do a pre-approval before you even get a property.
Okay.
Which really you're putting your best foot forward, and it makes the offer much stronger.
Right.
And we could definitely move up the closing date in those scenarios.
Now, there's a lot of buyers out there, first-time home buyers, that don't know why it's so important not to make any major purchases or do anything crazy until after you go to close. Can you please explain why?
Yeah, that's a good question. So you don't want to take out any new debt once you are pre-approved. And that's because we are going to, as a lender, we are going to do what's called a soft credit check prior to closing. It's typically around 10 days prior to closing.
Okay.
Any inquiries that are outstanding, we are going to have to get a letter of explanation regarding what those inquiries were for.
Right.
If there's new debt, we have to get documentation on the new debt.
Right.
And then we have to budget you on the new debt. So then, at that point, if there's new debt that's opened, your file will have to go back to underwriting. They'll have
Start all
to
over
take a
again.
look at it again. And if your ratios are out of whack at that point, then you might not qualify for the property that you were getting ready to close on. So
Right.
very
Which is-
important, do not open new debt.
Don't go by the boat, don't go by the Benz, gotcha.
Wait till the day you close.
There you go. Talk about the different loan options there are. There's FHA, there's VA, and then there's Fannie and Freddie. And with each of these loans, can you talk about how much you need to put down, the different criteria, interest rates, PMI, all of that? Can you sort of explain that?
Sure. So down payment for an FHA loan, the minimum down payment is 3.5%. We could go down to a 580 score.
Okay.
Potentially on an FHA loan at Caliber.
Okay.
Conventional, you're looking at a minimum score of 620 and a minimum down payment of 3%. And on a VA loan, we can go down to 580 and no down payments required.
Okay.
And then, so with an FHA loan, you're required to put a minimum of 3.5% down.
Okay.
Okay. You'll have mortgage insurance protection on an FHA loan, no matter how much you put down.
So if I put 10% down, I still have to pay the mortgage protection insurance?
Mortgage, yep, the MIP you're gonna pay for, if you put 10% or more down, you're gonna have that MIP on an FHA loan for 11 years.
Okay, and if it's 3.5%, I'll have it for the life of the loan?
If it's 3.5 or less than 10% down, you will have it for the life of the loan. So the only way to
okay.
eliminate that,
Okay.
that MIP is to refinance out of the mortgage entirely.
Okay.
Now there's one other piece to that MIP factor on FHA loans. There's what's called an upfront premium that you are financed into the loan. So
Okay.
it's not something you pay out of pocket, but it's put on top of your loan amount, and it's 1.75% of the loan amount. So if it's a $100,000 loan, it's $1,750 that's financed in with the loan.
Gotcha.
Conventional doesn't have that upfront premium. They do have PMI.
Right.
You can do a conventional loan with as little as 3% down.
Okay.
Okay. You're going to have PMI, which is essentially the same thing as MIP and an FHA loan.
Right.
Whenever you have less than 20% down, you're going to have that PMI on a conventional loan.
Okay.
And that can fall off, though.
So if you hit that 20% benchmark,
Correct.
then now what would be the steps? You have to have an appraisal done and go through your lender?
So it will automatically fall off if you just pay down the mortgage as it's going and you get to 80% LTV from when you purchase the property.
And LTV is loan to value.
value.
Okay. So it'll automatically fall off once you hit that 20%?
That's one way. If you come into a sum of money and you put a big chunk down on the mortgage,
Okay.
You can go to your servicer and say, hey, I want to have my PMI eliminated.
Right.
I have 20% equity.
Okay. A VA loan, you also have mortgage insurance?
VA loans do not have mortgage insurance.
They do not, okay.
So VA, we can do a VA loan with a score as low as 580,
Okay,
potentially. And there is no mortgage insurance. So it's really nice. They do have a funding fee. And the way that works is, it depends on how much you're putting down, if you're putting anything down. It could be as high as 3.3% of the
Okay.
loan amount.
okay,
But that's only for a subsequent use. So the first time, I believe it's 2.15 is your first charge if you're not putting any money down. If you have a disability related to
Your
military,
service?
your
Okay.
service, service-related disability, then you will be exempt from the
that.
funding fee.
Okay.
The funding fee is a lot like that upfront premium that's financed in with FHA. It's the same thing. It's financed in,
Into the loan,
so you don't have to pay that
out of
upfront.
pocket, it's rolled in.
Correct,
Okay.
correct. So real nice product. The rates are really low, and you can get in a property with very little money down.
Right, and I do know on VA loans, a lot of times they ask the seller to contribute towards the closing cost or purchasing cost of the loan for the VA.
Yeah, so you could potentially get into the loan for no money down.
Now, if you did a VA loan, let's say you are a first-time buyer and you bought a condo or a townhouse or something several years ago, and now you want to move up, your family's grown, you want to buy a single family, can you use a VA loan again? It's not a one and done, right?
You can use it again, but you can't have two open at the same time. So
Okay.
you'd have to close on the
The
sale.
first one, the sale. and
Typically,
then-
unless
okay.
there's, extenuating circumstances. But
Okay, all right. At Caliber, I know renovation loans are really popular right now, and at Caliber, I'm sure you have a product or several products that get into that. Can you go over them?
So we do 203K, FHA 203K loans. We do Fannie Mae home style loans, and we just rolled out a VA renovation program.
Okay.
So we do have a team that specializes on that.
Okay. And Caliber has a product, and I don't know how you did this, but we had a closing, and we walked in, and before anybody signed the paperwork, it was completely done and funded. Can you explain that and how great that was?
Yeah, it's nice. On a lot of our closings are pre-funded, so the money's there. The closer at the title company already has the funding number. It just gives a list of the documentation that they'll have to turn in within 24 hours.
Okay.
And we can fund it right when everything's signed. So you don't have to contact our closing desk and wait for them to give you the okay.
Right, after you sign all the paperwork.
So it really speeds up the process. A lot of times we'll have a closing that's done in 30, 45 minutes.
Yeah, which is nice.
That's right.
Chris, what's the best way someone can reach out to you, contact you?
By phone, 630-965-5435 is my cell phone.
All right, great. Thanks so much, everyone. Hope this answered some questions. Please reach out to Chris. He's here at Caliber Mortgage in Geneva. And again, I'm Mary Kay with Preapproval in St. Charles.
Thank you.
Thanks.